Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. A shallow recession might hit advanced economies in the first half of calendar year 2023, says SBI Chairman Dinesh Kumar Khara, but also tells BTTV that he expects businesses to spring back into action in the second half. Paytm founder and CEO Vijay Shekhar Sharma bets big on India, says India's emerging market technologies built in the country will define frontier tech markets in the days to come. In an exclusive chat with BTTV at Davos, he added that India has moved on from being the software back office of the world to product front office for the world. Deloitte's Puneet Ranjan shares an optimistic view of growth in 2023-24 at the beginning of a 15-year secular growth trend largely led by tech, says Ranjan. In an interview to BTTV, he added that this is India's century, expecting cloud and AI to fuel growth over the next couple of years. Domestic market logged second straight session of gains. Benchmarks closed with gains of over 0.5%. Nifty settles above 18,100. Sensex also higher by nearly 400 points, above 61,000. 2022 was the year of banks, but is the strength in these balance sheets sustainable over 2023? That's the question. Chairman of India's biggest lender, State Bank of India, says the PSU bank balance sheets are robust. Speaking with my colleague Siddharth Zarabi at the World Economic Forum, he added that the lender is very well placed with respect to provisional coverage ratio and write-offs. Here's an excerpt.
The globe has seen unprecedented inflation. We also saw inflation which was more supply side. Some of it seems to have been controlled. Do you think the worst of inflation in India is behind us now?
See, when we look at inflation, we have almost come down by about 200 basis points as compared to the peak of the inflation which we saw in the country. So I would say that the supply side constraints which are there essentially on account of the contact heavy industries, contact intensive industries, we are seeing that there is a very strong demand coming from the hoteling industry, from aviation, etc. And apart from that, even the agri production also is quite encouraging. So I think all this has got an impact, and the agri production particularly would have an impact on the CPI. So I expect that the inflation scenario also, now leave aside the imported inflation which we have on account of the crude prices, even that also we might see some kind of a better traction, and because we are increasingly going towards the renewable energy which will reduce our import bill in due course. But of course there is a very conscious effort on the part of the economy to de-risk itself from as far as the crude import inflation is concerned.
And we've managed to control the pass-through of the crude volatility by a physical support measure for our oil marketing companies, almost 20,000 crore and plus. But let's also talk about one other big theme that we have seen in the last several months, practically for the whole of 2020. And we here in Business Today TV at the India Today Group call it the big banking turnaround. Public sector banks back in favor and the flavor of the season. Is this yet another instance where I should ask you that the worst seems to be behind, and now as public sector banking and overall banking in India is fully on track?
Yeah, I think post the global financial crisis in the year 2008, and also the AQR related issues which were there in the year 2014, the banking sector in general have understood the lessons which were there, and to that extent they have significantly strengthened their risk management practices. That having said, so they are very, very mindful in terms of the underwriting, they are very mindful in terms of the control and follow-up of the loan book, and also they have provided very well. They have identified the stress and they have provided for that stress, and to that extent I would say that the public sector bank's balance sheet is quite robust now. And apart from that, the recapitalization which has happened over the past couple of years, that has also helped them to really ensure that there is enough growth capital available to support the growth ambitions of the economy. So I think overall I would say that the provision coverage ratio for the system as a whole at about 71% plus, and also the capitalization being very strong, they are very well placed to support the growth of the economy.
The same point really for SBI, if you could give us a quick sort of overview.
Yeah, we have significantly strengthened our risk management practices. We came out with a, in fact, risk review department, which is actually evaluating each of the proposal and thereafter giving their inputs to the credit committees. So that has helped us in terms of ensuring that our portfolio quality index keeps on improving, and that is something which we monitor at on an ongoing basis. And apart from that, our own the PCR also, when it comes to the corporate book, it would be actually 80% plus. Okay. So to that extent, I would say that we are very well placed when it comes to our provision coverage ratio, when it comes to our underwriting, when it comes to our control and follow-up of our advances. We very closely monitor even our SMAs on an ongoing basis. We have become a very significant retail book, so we ensure that the pre-delinquencies calls are there. And all this has led to a situation where our retail book actually has got around 0.5% of the GNPA, which is, I think, perhaps the best in the retail lending sector. And I think when it comes to our corporate credit cost, it is also, we are seeing that for past, in fact, in the last quarter, we saw that it was less than 100 basis point. And I hope that we will be in a position to demonstrate even much better quality of assets going forward as well. So this is what my assessment is.
In an exclusive chat with BTTV at Davos, digital payments giant Paytm believes that India's tech development will lead the charge for frontier tech markets. Here's a slice from that interesting conversation with Vijay Shekhar Sharma.
The emerging market technologies built in India will define the frontier market technologies that will be it. Up till now, the world used to look up to the West. Okay, this is the technology and this is the technology that will be solving the world problem. And Western problem solution are Western problem solution. They are not necessarily in the cultural and the nuances of this country or our emerging markets are at large level. The best part is we as Indians, who used to be the software back office of the world, are now the product front office of the world.
That's a very good point, product front office. Vijay, you had tweeted 2 days back, and I want you to explain what you meant and also the conclusions. Is there a use of bank account specific UPI ID or QR?
Yes.
And the answers that are visible to that tweet is yes, please describe use case 42%, no, too much to handle, and almost 56,000 views, significant traction. Why did you put this tweet? What are you driving at?
I was trying to find out how savvy a user is.
Okay.
For example, like you and I are like, there is one app, there is one QR, and we are happy with it, or one bank account.
Yeah.
I wanted to see the internet user whom I am interacting with, how savvy is that person that I have multiple bank accounts and I will need multiple UPI address and QRs. So that if I need money in this bank account, I'm showing different.
But right now it is multiple QRs, right?
Actually, the trick here is that there is a by default, even if you have, let's say, multiple bank accounts, typically apps like Paytm issue single QR code and single UPI address. Now I was asking that would you need multiple of them?
I
Or
would
is
say
it
totally no. Oh, why
too much to handle?
Yes.
Or it is needed as a power user thing.
So one India, one QR.
One India, one QR and multiple bank account of a single user. Will you need multiple QR for single bank account specific? In other words, it will be the UPI QR.
But what is this 42%? It's not like a sort of overwhelming majority which says too much to handle.
But I want to tell you, this is what I was telling. The use cases are so profound. For example, like आप घर में मान लेते हैं बुटीक शॉप चलाते हो, सूट की दुकान चलाते हो, ट्यूशन टीचर हो, आप कुछ अपना इंडिविजुअल करते हो. देखिए देश की जनता में जो सैलरी जनता है वो बहुत ही फाइनाइटली स्मॉल है. For a percentage, if you look at it, it is a very small population percentage. So more or less सब कुछ अपने हिसाब से कुछ ट्यूशन कर रहा है, कोई शॉप खोल के बैठा है, कुछ करके बैठा है, तो 2 बैंक अकाउंट रखते होंगे. अब अगर मैं आपके फोन पे एक ही क्यूआर दिखा रहा हूं तो उनको वहां पे समस्या होती है. तो 40% 42% वो लोग हैं जो ये कहना चाहते हैं देखो ये मेरा बिजनेस यानी कि जो मेरा काम करता हूं उसका पैसा आता है और ये मेरा पर्सनल पैसा आता है. ये इसका फीडबैक का रिजल्ट था.
तो हमने वन इंडिया वन क्यूआर EKYC ये सारी चीजों के बारे में आपने ये बोला. देयर इज अ लॉन्ग
फुल एंड मैं आपको ये केवाईसी पे भी बोलता हूँ. और आप देखिए कितना फॉरवर्ड लुकिंग रेगुलेटर है. मतलब मैं तो ये बताना चाहता हूँ, मैं अपने आप को लकी मानता हूँ और मैं जानता नहीं मेरे से पिछली वाली जनरेशंस में इस तरीके से गवर्नमेंट और रेगुलेटर का सपोर्ट मिलता होगा या नहीं मिलता होगा. क्योंकि अगर आप देखें सिद्धार्थ, हमारे देश में डिजिटल के द्वारा री-केवाईसी का थोड़े दिन पहले एक सर्कुलर आया था। आरबीआई गवर्नर ने इनफैक्ट पब्लिक में आके बात करी कि अगर आपकी डिटेल चेंज नहीं हो रही तो आप ईमेल पे कंफर्मेशन दे सकते हैं, ऐप पे कंफर्मेशन दे सकते हैं, चेंज नहीं हो रही हम री-केवाईसी करें। मैं कहता हूं ये कहां होता होगा, मतलब ये तो प्राइवेट कंपनी में एक एम्प्लॉय ने बोला कि सर ये यहाँ पे पार्किंग लॉट खराब है, हम यहाँ से जाते हैं, वो करते हैं, वो थोड़े दिनों में एक नई तरह से रूल आ गया। इतनी एक्सिलरेटेड फाइनेंशियल सर्विस, बैंकिंग, रेगुलेटर रिस्पॉन्स, गवर्नमेंट सपोर्ट, ड्रामेटिक। इंडिया
इज नॉट हैपनिंग एनीवेयर एल्स इन द वर्ल्ड और चाइना फॉर एग्जांपल।
देखिए मैं आपको एक, चाइना में तो गवर्नमेंट उल्टा काउंटेरियन हो रखी है इस टाइम पे फॉर द बिजनेसेस, सो लेट्स जस्ट लीव दैट।
स्टार्टअप्स को तोड़ने
वो काउंटेरियन हो रखी है कि हमें कुछ और एजेंडा है। रेस्ट ऑफ द वर्ल्ड में कहीं हो नहीं रहा ना। आप देखिए ना, जर्मनी, जापान को देख लीजिए। अब भारत का जो डिजिटाइजेशन है, इंडियाज डिजिटाइजेशन इज एन एग्जांपल फॉर इवन डेवलप्ड कंट्रीज।
While speaking exclusively to Business Today TV, Siddharth Zarabi, Byju's co-founder Divya Gokulnath stated that the layoffs were part of the optimization that the business required at that point. She also shared Byju's plan of action to deal with the current crisis.
Have you changed something internally when it comes to selling courses, ensuring that people, kind of those who don't fully understand what it involves, get a chance to reconsider and don't get sort of railroaded?
That's always been the motive. So even if you look at it, the big pivot we've done right now is that we had a feet on street sales model before, because prior to the pandemic people didn't know the benefit of online learning. But right now, because you know the awareness is all over the place, everybody knows the benefit of online and hybrid learning, we have moved to an internal sales model where every minute of that demo is completely recorded.
And
right?
Where does the buck stop in the internal structure when it comes to sales now?
So by default every sale is unapproved. So the sales get approved at a central level after a 3-level audit. So even if a sale happens where it should not have happened, so for example if the parent couldn't afford the product, they're automatically eligible for our Education for All initiative. Today we're impacting 5.5 million children all over the country from the remotest parts. We partnered with Niti Aayog, with the AP government. So we are impacting people on the other end of the spectrum, and it's very heartening to see that this is their primary mode of learning and they're first generation learners of
Quick
their
and
family.
final point on this subject. To all the criticism and that has come about, what would you tell the wider community who's watching us as to what Byju's is going to has done and is continuing to go to do in 2023 and beyond to address all those questions that were raised?
So we've always been cognizant of the fact that we are learners every day. Right? That being said, the people who are closest to the action, and this is just to tell that sometimes the way it is portrayed is not what it actually is. In fact, we've had the best last 1 year ever in terms of the number of products that we've added or the services that we've created.
And from a revenue point of view?
Even from the revenue point of view, we've done really well, right? You'll see the numbers very soon. But the people closest to the action, which is investors and employees, you would see a very strong indicator that things are moving the right direction, because no one has really quit. So from the first 300 employees,
but you laid off some people.
270 people of our core is still with us. The top 6 founders of the company are still with us, and no investors have left. Yes, we had to optimize, not just on the people front. We had to optimize on marketing. We had to optimize on people. We had to optimize on operations. It was the most difficult thing for us to do. Seriously. But it was sometimes calls have to be taken. Sometimes what Divya and Byju want is not what Byju's as a company demands.
Absolutely.
And those calls have to be taken.
Moving on, here's something for moviegoers. With multiplex giants Inox and PVR merging into one, will your bucket of popcorn still be heftily priced, or is it going to be far more affordable? In an exclusive conversation with Siddharth Zarabi, Inox Group's Executive Director Siddharth Jain explained the rationale behind popcorn pricing. Listen in.
With the merger, is popcorn going to get cheaper?
Perennial question, right? No, it's going to be affordable. It certainly will be affordable.
I will drive that point further. At a time when input cost pressures have been felt by most industries, I really want you to flesh that point out. Also from a social perspective, a lot of people saying, well, you know, and there is legal certainty as an operator that we got from a recent order. But really, explain to our viewers, why is it so expensive? Are you making profits, or are you covering your costs?
Well, I think our balance sheets speak for itself. You know, the EBITDA margins at which we work in the 15 to 18% range. And as you very rightly pointed out, the input costs, you know, whether it's electricity, manpower, rental, all these are increasing at an increasing rate. Inflation pressures are there. So you have to cover your costs in some manner. At the same time, it's all demand and supply. We will price the product at a price that the consumer is willing to pay. So when we do get feedback, if the pricing is too high, we certainly roll it back in certain places.
Have you done that in the
Absolutely. It's a continuous process.
Okay.
It's not
And you don't think it's a matter for headline making?
Not at all.
Okay, I'll continue to press this conversation on movies, because if I want to give him a moniker with his permission, he's India's movie man. 1600 screens going to 3200. By when, by the way, is it going to be 3200?
Well, I think it's going to take a few years. On an average, we'll put up another 200 to 300 screens per year. So it'll take us a while, because it has to go hand in hand with the mall development in India.
A second straight session of gains on the Lal Street. The benchmarks indices logging over 0.5% in the green, both closing above key levels, over 100 points on the Nifty, and Sensex also close to 400 points higher. The day belonged to the metals, followed by decent gains in pharma and financial names. And like we mentioned, metals didn't really let go of their sheen. Hindalco, Tata Steel among some of the top movers today, as you can see there, followed by names like L&T, UPL and Wipro. On the other side, it was a mishmash with Tata Motors, Adani Enterprises, HDFC Life, all declining upwards of 1% or so. Ultratech Cement, BPCL, IndusInd Bank, some of the other laggards in trade today. India's GDP growth rate, according to Raghuram Rajan, is expected to slow to 5% in 2023-24. While speaking to India Today's news director Rahul Kamal, the renowned academic added that this is not the time to be complacent, as more needs to be done to get growth back up. Listen
in your individual capacity as a renowned academic, how you see the India story at this moment?
Well, I think certainly growth this year, this fiscal year that's going to finish is spectacular, 7%. But you'll have to look at the details of that growth to feel comfortable. And what's happening there is that we grew fairly fast in the early part of the year, rebounding from the slow growth as a result of the pandemic. And if you look at the later part of the year, we've slowed down to about a 5% rate. And that's a worrying issue, because going forward, 5% may be even less because of the effects of the slowing global economy. We're already seeing our goods exports slowing down substantially. So I think we can't be complacent. Good year, but looking forward, we need to do more to get growth up to the place where we as a country can provide all the jobs we need.
When I speak to economists who are currently in the government system in India, they say Raghuram Rajan was wrong. He said that the Indian economy, in the manner in which we dealt with the pandemic, would do much worse than it has. When you meet him, ask, does he accept that he was wrong? So how do you respond to this?
Well, it depends on what your baseline is. From 2019 to 2022, how fast have we grown? 2.5% a year. Are you satisfied with 2.5%? If they are satisfied, I'm wrong.
But relative to the rest of the world and the economic situation.
So what you have to look at is how we're doing relative to our baseline. If you look at the US, back to its baseline growth. Look at India, 7% below the baseline according to JP Morgan. So yeah, we haven't gone back to where we were. 7% in terms of GDP is a huge number. And remember, that's repeated. So we have some catching up to do. I won't be as complacent as the government economist.
In the data that is coming out of India at this moment, what is of greatest concern to you, Dr. Rajan?
It's the lower middle class. I talk to business people, they say K-shaped recovery. Of course, there are people who say, there's no K-shaped recovery. Big businesses doing really well. They paid down their debt during the pandemic. Banks, they've written off their bad loans. So banks and businesses ready to go. The problem is the lower middle class, they've had a bad pandemic. Some of them have lost their jobs. Small and medium enterprises didn't do so well. They're coming back. But the issue then is, where do these people feel the comfort? As you know, two-wheeler sales haven't done nearly as well as four-wheeler sales. There again, two-wheeler sales are coming back. But there's ways to go. And if you look at two-wheeler sales, they're back to 2013 levels. So there is some recovery needed, My worry is the lower middle class. That's where the anxiety is, the lack of jobs.
You and the likes of, say, Professor Abhijit Banerjee were recommending more handouts to those at the bottom of the pyramid. The government held out against it, saying time will prove that we are right. It may still take some more time for the last word to be written, but in the way that things are, the government's assessment is, look at those countries that went out and spent much more than India did. They are far worse than we are right now.
It's a very good question. The government did spend a fair amount at the bottom of the pyramid. So what we were saying in the early part of the pandemic is you need to spend that money. They did. And they've continued it. Remember, the government food grain this thing program is being extended by an additional year. The point is there was a lot of suffering. There still is some suffering. Now, could you can debate whether you could have ameliorated that. My sense is if you look at government expenditure, some more could have been spent in that direction without necessarily breaking the budget. Now, we were not saying go out and break the budget. It was transfer some payments from one side of the budget to another. Take, for example, how much we're spending on subsidizing big industry, the PLI payments, right? That's going to mount. It's not yet a big ticket item, but we have 2.5, I think, lakh crores already budgeted for that.
And before we wind down, another interesting conversation from our Davos collective today. Puneet Ranjan, CEO Emeritus at Deloitte, believes that growth in 23-24 will be largely tech-driven. AI and cloud services will be the drivers in the years to come.
Last year, when Puneet was on the same hot seat, there was a lot of optimism, and he had spoken about the optimism post-COVID across the globe and India. But Puneet, one of the headlines over the last 2-3 days, and you must have been meeting a lot of people, but there are two different surveys, and they could just simply be captioned as from record optimism to a lot of record pessimism. What's changed?
I'm more optimistic than that, I would say. From
I'm glad you are. Most Indians are.
Right. From record optimism to caution. I would use the word caution rather than pessimism. And listen, the war in Ukraine, Russia's aggression against Ukraine, the high inflation, supply chain issues are causing concern for many of our clients, and there is caution.
Okay. And that caution is about what? Growth, consumer demand, or continuing supply side pressures and cost pressures?
I think all of the above, but I think it's transitory. I'm optimistic that 2024 is going to be, at the end of 2023 or 2024 is going to be a really good year. We are at the beginning of a 15-year secular trend enabled by technology, growth trend. And I think that is going to lead to a tremendous amount of growth. And then, of course, what is happening in India is remarkable. I've said this before, I think this is India's century. And I finally believe that the tangibles are manifesting, but the intangibles are manifesting. Every conversation with the Indian diaspora that I've had has a certain level of real optimism about India.
Well, optimism does stay, and I think it's in our core to be optimistic. I'll come up, take the tangible versus intangible point subsequently, but I just want to pick up this point where you said 15-year sort of upcycle driven by technology. What exactly in technology is going to do that? And obviously, what you must also mean is that it's going to help us ride out the downturn.
It will modulate the downturn. So digitization, as an example, or cloud, or AI robotics are all examples of how technology is enabling more efficiency and effectiveness in the way that business is conducted. There has been more digitization in the last 2 to 3 years than in the last 10, and I anticipate even more. And so I think that is what will fuel growth